The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the February 3rd, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. You know this one. It's called Become Your Own Electrician, the electrician of your beliefs. And the reason is because beliefs have the power to create and the power to destroy. You and we've got the amazing, incredible, awesome ability to take any experience of our lives and create a meaning, well, one that either disempowers us or one that can literally save our lives and take us to places we never even dreamed about. Which do you want? Think about it like this. There's only one thing that you can control in life, and that is the meaning that you give to something. That's the beauty of the markets we trade. We've got bulls. We've got bears. We got lots of bears out here. You know, one's going to see an event as a selling opportunity, one a buying opportunity. You see, it's your beliefs. It's the meaning that you give to events. Those are the things. You are the only one in control of that meaning. Pretty cool when you think about it, because what we can or cannot do, what we consider possible or impossible, really, it's rarely a function of our true capabilities. It is more likely a function of our beliefs about who we are, and that matters because all personal breakthroughs begin with a change in beliefs. So, what's the most effective way to change your belief system? I believe that what you need to do is you need to link your brain and associate massive pain to your old disempowering beliefs. You know what they are. Just write them. Just put them down on a piece of paper out here and identify all of the pain that it has caused you in your past, all the pain that is causing you right now. And how about just close your eyes and picture not doing anything about it for the next 5 years or 10 years. Folks, sometimes knowing what we don't want is just as important as knowing what we do want. I think you need to know both. And what that means is that you're going to go ahead and get rid of that old disempowering belief, and you're going to replace it with tremendous pleasure. The idea of adopting a new empowering belief out there. And the reason is because at any moment, the decision that you make can and will change the course of your life forever. It could be the next person that you stand behind in line. Could be the next person you sit next to on an airplane. The phone call you make or take. Could be the very next movie you see. The book you read. The newsletter you subscribe to. It could be any one of those things, folks. One single thing that will cause the entire set of floodgates to open, and then all the things that you've been waiting for will fall into place. You know, if you are confused about something, the benefit there is it means you're just about to learn something. So don't give up. Don't give up, folks. Remember, you are your own electrician. Let's go check out the electricity in the markets out here. The electricians, the Bears electricians, our department is out in full force. You got the Dow off 88 points here right now, trading out at 15,608. S&P down 10 points. It's trading at 1772. NASDAQ off 29 points, trading at 4,075. Russell 2000 down 10 points, trading at 1120. NASDAQ down 21. New York Stock Exchange off 58 points. Everything well. The leader in the clubhouse, Russell 2000, off about 0.9%. Let's see. Pulling up the rear is the NASDAQ Composite. Never a good thing when your two leaders are your highest percentage-wise to the downside out here. We got Goldilocks has taken off to the moon. It's broken through its trend line out there, so that's bullish. It's trading up $23 and change, trading out at $12.63. Silver having taken off from its bottom as well. It's up 44 cents, trading out at $19.56. Our call-in number is 877-927-6648. Give us a call, folks. We would be happy to take a look at your stock chart. Let's go start off with Goldilocks out here, trading out at $12.62. You can see it has broken through. We'll see how the day ends out here. We'll see if it can stay above its descending trend line out here. That's your trend line taking you back into the highs. That is the blue diagonal line going across my screen out here. Probably the trend line's right around 1250, so any close above 1250 today is a move back above that trend line. It's right now trading into a swing point. From January 27th, that swing point has 161,000 contracts. Today you've done 68,000 contracts. We'll see if Goldilocks can get some juice in order to really complete its move. It's A to B equals C to up pattern in the 1361-ish type range out there. Silver been traveling in a sideways consolidation, went and tested the bottom of that consolidation pattern. That is held. You've got not just a bullish engulfing candle today, but now you are forming a morning star reversal pattern out here. We saw silver do the same thing at its low, so this is an important area to be defended in silver, right around the $19 and just a little bit of a change range out here. We've got very strong support. You've got this little reversal pattern right here. This is the trading sessions of December 2nd, 3rd, and 4th out here. There's your morning star pattern. You are now forming a second one here today. That's assuming that silver closes at these levels. What does that mean? That means, well, okay, you couldn't bust it down. Now it's going to try to bust it up. That's in the $20.50 range. You're trading at $19.56 as we speak, and that is in silver. Let's go check out these Let's go check out the futures contracts, and we'll go take a look at the indexes here, because we are seeing price try to break the lows out here. Let's take a look at the ES Mini. The ES Mini right now, it's trading down into the lows that were established here 8:30 in the morning on January 31st, on Friday out there. That level is 1761.25. You're at 1762. You're moving down. Looks like with accelerated volume. That had 60,000 contracts on that trading session. You're moving down into it with 100. Oh, my goodness. You are moving down with some volume. 176,000. It should not have any problem breaking through that level. That is on the ES Mini here. So it's trying to take out a area of support, that prior swing point. What is that? That takes you all the way back here. You know what? I'm going to switch over to the 120-minute charts here, make it a little bit easier for us to follow along, because that's going to take you back to Uncle Ben Bernanke Day out here. That's the December 18th time frame. So that is where price, we'll see if it can find any support there. That's actually what it's testing here right now. I take that back. That is the low from December 18th, 1760.75. Let's draw a line. It's really testing that area as we speak here right now. So the volume on that session, on that 120-minute session, let's put a black line. Let's put a red line across the screen on that. Oh, I didn't mean to do that. That was a major mistake. Let's see here. There we go. Let's try and make that a... come on. What are you doing to me? There we go. Now we got it as a red line out here. Let me take a look at the volume on that. There was a pretty big volume on that December 18th session. Yeah, 1.3 million contracts out there. So that is, you're hitting it with 200,000 contracts. So we'll see if this level here holds, if that is your strong area of support. And that is on the ES Mini. That's what's going on as we speak here right now. Let's go take a look at the other 120-minute charts, though, and see what we have going on. Let's go take a look at the week link out here. Let's go take a look at the Dow. It should be below that level from December 18th, right? Let me pull this back here. Oh, yeah, it's well below that area. So the Dow continues to move lower. It's below all kinds of swings out here. Let's take a look at the daily charts. Let's go back to the we'll go take a look at the indexes as well. I want to see what's happening here on the daily charts. NASDAQ futures have got pretty decent Fibonacci support out here at the lows from 35.29 from January 29th. But we'll come back to that. I wanted to go back over to the Dow and see what it is doing. So here you got, this is real trouble, folks. The Dow is broken back into its consolidation pattern. This is a daily chart, which had held as of earlier this morning. It was tested on Friday and held. And that was a consolidation. That was a 1,000-point consolidation. When it's completed. So we've got the Dow more than 1,000 points off of its high. The actual high on December 31st was, what, 16,540. So you're now at 15,512. So you're off 1,000 points, a little bit off of 1,000 points. If we take a look at the Dow futures here, number one, if we just take a look at a retracement from the low from October 9th to the high that was put in on December 31st, you can see it's approaching the 0.618 retracement level at about 15,371. You're at 15,509 as we speak here right now. But the way this is trading, I'm saying no way. It's moving into the extreme over sold condition, but it does not look to me like that area will hold. If it breaches 15,371, then you're going to go all the way down to the rising price channel. You may even go all the way back down to the bottom of the consolidation pattern, right around the 14,550. That is normally what happens when you break back into a consolidation, and we can find charts like this that show that all the time. So that is the pattern behavior. So today is really an important day when we take a look at the Dow futures out here. We'll take a look at the Dow itself, but right now I'm just taking a look at the futures contracts for us. Let's take a look at the ES Mini. I want to see what it is doing. So it's up against some pretty strong support out here, 0.382 retracement off of its October 8th level, 100% move off of the December 16th swing point out here. That was the 0.786 Gartley buy pattern, and then also the November 8th. So if it breaks this low here, 1736.50, this is the ES Mini here at 1762, so another 30 points or so to the downside. That is a dangerous thing because there's really nothing to hold it in place up until you get down to the October 9th area at around 1640 out there. That's 120 points south of where we are at right now. So that is on the S&P futures contract. That is the daily that we're looking at. Let's go switch over to the indexes. Let's start to take a peek around, see what the market is doing inside these indexes. So this is not a good scene here because you got the New York Stock Exchange now breaking through the December 18th move. That low out there was 99.49. You're trading at 98.82 right now. So that area now is failing as a level of support. We take a look at the October 9th low and take a look at retracements inside the New York Stock Exchange from its low to the high that was put in on, was put in on January 21st out here. It's on its way down to the 0.618 retracement level, but I don't think that'll stop it. 98.08 is the number. It looks to me like if the way that the New York Stock Exchange is trading here, this thing wants to pull all the way back to October 9th to 94.41. Look, it's got a couple areas for it to move through. 98.08, 96.47 happens to be your 0.786 retracement, but there's really no horizontal support out here inside of the New York Stock Exchange. So that's what that looks like. Take a quick peek here at the VIX. That's up 1991 as we speak right now, so that's on its way. That's well above the 50-day exponential moving average. Let's take a look at the S&P 500, see what it is doing out here. This happens to be a lunar chart. Let me move this full moon, get that out of the way. You can see you're traveling also below the December 18th. So this is going to be an important session here today. A close below the 1767.99 level. That is on the cash S&P right now. That is not a good scene. That sets in place moving down to the November 7th area around 1746. But the reality is we could have just seen the A to B equals CD to the downside form. When we come back, we're going to talk about what that actually means out there. 877-927-6648. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with TAS Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to TAS Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 139 right now. S&P down 17. So let's go back to the S&P 500 and what took place on Thursday last week. We had a one-hit wonder. We had an absolute failure because we had some nice volume off of the lows out here. We'll take a look at the ETF structure here in a bit of time, and it absolutely failed. And that has more of a smell of a bearish market than anything else. I mean, an absolute failure on Thursday. We're seeing that failure to the downside here this morning. So it is really important that this December 18th level, the 1767.99 area, it's very important for us to watch that, because what actually took place on Thursday, if we take a look at this first leg down, now I'm coming off in the S&P 500. I'm looking at the January 15th high, and yes, it is the first leg down. There's just it doesn't appear to be a question in my mind at this stage. That's why I sent out my normal newsletter I sent out on Mondays, but after looking at the charts and seeing what I actually saw after taking a look at the week ended, I went ahead and sent out my charts to all of my subscribers yesterday afternoon, especially because I made some changes to the long-term accounts out there, the long-term, your retirement funds and so forth, and how you should be looking at that. So if you've never test drove Mastering Probability, I'm telling you now is the time that you want to do that. So just get yourself over to the homepage of TFNN.com. Don't even think about it. Don't hesitate. Get over there. You can test drive the service for 30 days. It comes with unconditional money-back guarantee. And now is the time. So I know that 70% of the listeners are really just managing their long-term funds and listening for, information. You like to learn stuff. Now's the time. So now you need to make sure that you've got some real good guidance as to what is going on with those accounts. So if we take a look at what took place on Thursday, you'll see that if you come off of the high from January 15th, which was at 1850.84, down to the low that was put in on Wednesday, and that was January 29th. That was at 1770.45. It's the S&P 500 we're looking at. 1801 was the 0.382 retracement, your dead cat bounce. You got up to a high of 1798. We'll call it 1799. That's close enough for me. That could be your 0.382 retracement of this move. Here is what the A to B equals CD pattern. And folks, I consider myself to be the expert of experts when it comes to A to B equals CD down patterns. And I can tell you that the 1-to-1 says 1718.55. No chance that that's where, if this is the A to B equals CD down, and so today's volume is very important, is that where price is going to stop in the S&P 500? Not a chance. You're looking at more like 1696, 1668. We take a look at coming off of the swing point low here, and we're coming all the way back into October 9th, 2013. We go from that low to the high out here. You'll see the 0.618 retracement makes you to the 1724 level. That's your 1-to-1, which is down at 1718. No way. That's not where price will stop. Price is going to make its way down to at least 1690, 1696 out there inside the S&P 500. And you're at 1764 right now. So if we go take a look at volume, let's go switch over to the ETF structures here. Let's go take a look at the SPYs, see what kind of volume we've got here as of today. We've been trading in the markets for an hour's time, just under an hour. And today you've got so far 44 million shares going against the swing point low that had 216 million shares. Just do the math. Just take 44 times 6. We'll just use 6, even though we have a 6.5 hour session out here. 6. That's about 250 million or so. So you've got volume moving through the B point of an A to B equals CD down. It's as simple as that. Now, I have no idea whether volume is going to maintain this level here. Let's go take a look at an intraday chart. Let's go take a look at a 10-minute or 5-minute chart, whatever pops up on my screen. So it's 10-minute chart inside of the SPY out here. And so volume's been accelerating to the downside, not decelerating since the market opened. So the market opened out here, and it had volume of 7 million shares to the downside. That picked up speed, 7 million shares. The next candle, 4, 9, 10 million. Right now you're at 5 million, and we've got two more minutes to go, it looks like, in this trading session to the downside. So volume is right now accelerating to the downside inside of the ETF structure out here. And you're breaking a B point, which looks like it will be a B point of an A to B equals CD down. And the 1-to-1 in the SPYs out here, man, I really thought this market might let us get a shot here, would be just devious enough to send out the signals that the coast is clear and everything is okay. And it's not that it can't do that. Your 1-to-1 inside the SPY says 170, 177. No way, folks. That is not where price will stop if this is we get a confirmed A to B equals CD down. Right now, Dow's off 141, S&P down 17. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow off 150 right now. S&P off 17. Composite down 49 points, leading the charge. Well, actually, the Russell 2000 is leading the charge. It's off 16 points. So we'll go through each of the indexes here. Potential trouble here in paradise, and that is with the euro, Japanese yen. Now, it is pushing down into its 0.618 Gartley buy pattern. That price number right around 136.59. We're very close to it right now. We've hit a low of 136.65. So, in essence, we have completed that pattern out here. We're moving into a oversold condition, something that this currency pair hasn't seen for quite some time. In fact, last time it was in an oversold condition would take us all the way back into July of 2012 out here. So this is starting to look now. If this level here doesn't hold, the 136.60-ish range out here, that's not very promising for stock prices out here. We'll see substantially lower stock prices. So that's on the euro, Japanese yen. What else? Well, let's go back. So let's take a look at the indexes, the ETFs. Let's put this together. Let's start off with the ETF here, and then we'll go take a look at the index. We're going to go take a look at the IWM. So we got these SPYs here figured out, and we know where they are likely headed to. We know what today is a very key session out here. So I do expect, when I took a look at an intraday chart, the 30-minute chart, we're going to need to see a little bit of a bounce bounce to move sideways to work off an extreme oversold condition. So, I expect to see that here over the course of the next, hour and a half or so. Could even begin here momentarily. But that's perhaps all that we're really looking at here, is just working off of an older, oversold condition out here. In any event, let's go take a look at the IWM. This had formed, as you know, it's a 3-drive to a top pattern. Really, its second 3-drive to a top pattern. Did it really perfectly. It was off by 1 day. It's a big deal out there. And that's coming back to the January 22nd high. Now, what the IWM is doing, as all 3 drives should do, is at least get down to the first drive. Well, in this case here was a 3-drive to a top, but all the way down to the December 11th swing point out here. You are inside it right now, inside the IWM. It's got 47 million shares at that swing point, and you've come into it so far with 18 million shares in only an hour's worth of trading out there. You've got volume picking up to the downside. Now, that says that if that, so we've got a couple of patterns out here. We were talking about the one-hit wonder on Thursday of last week. So if we take a look at the IWM formed a B point of an A to B equals CD down. That was on January 29th, and that was at 111.02, 61 million shares down there. That's your B point. What happens, we have a one-hit wonder on Thursday as price bounces up. Now, in the case of the IWM, it did it with light volume. All of the ETFs, with the exception of the Qs, did it with light volume. The IWM bounces with 40 million shares, moving into, at 60 million shares on January 27th on the way down. You can see it was a 0.382 retracement. So this could be forming the A to B equals CD down. And at that stage, 1-to-1 says 107.32. No chance. There's not any chance that is where price will move to. This A to B equals CD down with the volume that's coming in. That means that you got to see it close today below 111.02 before you'd have a confirmed A to B equals CD down. But if that's the case, this is not going to form a 1-to-1 on the way down. At least I don't believe that it will until I get some additional information. But right now the information says, no way. This would be moving much lower. In the case of, also traveling through a swing point here of December 11th, it's going to easily have the volume today. That's down at a price of 109.32. Whether or not it gets down that low today or not, I don't know. But very important to watch the IWM. You see it close today below 111.02. Unless the volume completely evaporates today, you now would have a confirmed A to B equals CD down. Let's take a look at the SPY. Did we look at the SPY? We did the SPY. Let's take a look at the diamonds. Let's take a look at Lucy in the sky with diamonds out here. So, unfortunately, inside the diamonds, we never got a bounce at all to speak of. We pushed down on January 29th into the consolidation zone. You did that with 14 million shares. That was really going against what? It's at the top of this consolidation back here. You were pushing down into it with volume. Back into the consolidation. You bounced a little bit. You can see here, I'll show you the retracement. Way less than a 0.382 retracement out here. So it's not even A to B equals CD down. Instead, it's got its own pattern. Its own pattern is it's broken now into the consolidation. That says that the diamonds want to trade down to potentially the bottom of the consolidation, 146.96 out here. So the 0.618 retracement, 154.04, that certainly is in play. 150.93, but I'd have to say more likely a move down to the bottom of the consolidation. We can see it's in the sold condition, but we're just seeing, one day bounces just to work that off, and then boom, right back down into that level. So that is on the diamonds. No real pattern other than the fact it's back inside this consolidation. That alone is a pretty big pattern itself. Let's take a look here at the Qs. So here is the last savior for the bulls out here. And this is the Qs. The Qs here today moving into the swing point from last Wednesday, January 29th, has not broken that level yet. That is 52 million shares. You have pushed down into it so far in an hour and 10 minutes worth of trading with 15 million shares. 15 times 6 in my book is 90 million if it were to maintain this type of volume. Look, it doesn't have to maintain this type of volume. You are pushing into that swing point with volume. It's as simple as that. That has only 52 million shares. That says that low of 84.76 is probably the key number for you to focus on all day long out here. Because if you see it close below 84, if you see price move below 84.76 and it's doing it with volume, then that will have set up its A to B equals CD down, and you will have busted through the strongest level of support or ETF or index that is out there in the marketplace, and that will be a bad scene out there. So it's all up to the Qs, it's all up to the NDX 100, it's all up to the composites day to run in and save the day out here, because, again, it closed below 84.76 with more than 52 million shares, and you would have a confirmed A to B equals CD down. I'm thinking that this Gartley sell pattern out here is not going to come to fruition out there. That is in the Qs. I don't know if we can go take a look at the indexes. Let's go do that out here. Give me a moment here. We'll pull up the NDX itself so you can get the numbers on that. Now here's the monthly chart for the NDX. Now the monthly chart here last month gave us this little dark cloud cover candle out here. So, somewhat of a reversal. Of course, if we get a close, you just get any lower close here this month, you will have follow through. You really want to see it from a bearish standpoint or bullish standpoint. The numbers to be watching are the 34.9619 level. That's the open of December 31st out there inside of the Qs. Let me take a look at the daily chart. I got the daily chart somewhere so you can see what we are looking at here. So the Qs had completed its 1 to 1.272 to the upside, did it really right to the T. The projection of that pattern was 36.32. It got up to 36.34 and change out here. So the key is going to be the NDX 100 and the level of 34.6164. So we know you're pushing into that swing point. You're doing it with volume. That says that it's going to get down there and it's going to at least test the lows. But more likely, when it does break the lows, and we may have seen the B point of the A to B equals CD down, you're looking at 33.24, maybe 32.64 as your price targets inside of the NDX 100. Inside of the Russell 2000 here is the monthly chart. It gave you a bear sash candle here last month. We'll see if it can actually find support here at this trend line. This is a trend line coming off of the highs in 2000. That also is coming off of the high in July of 2007 out there. Price point somewhere around the 1092-ish type area. That is inside of the Russell 2000. Let's take a look at the daily chart, though. Daily chart shows the three drives out here. Well, it shows the first three drive to a top pattern. Let's get rid of that one. Let's put in the one that has taken hold. That pattern looked like this as we draw this in here, right up to that level. And now what you can see, you're trading into, no, it has not gotten down to this. I think the swing point low, 1099, 74. No, swing point low is December 12th out there at 1099.67. So that's its target. But if we do take, you can see the 0.382 retracement here that we've seen. So that is the, that looks like that is now the B point of the A to B equal, the C point of the A to B equals CD down. Your B point on this happens to be the low from January 29th out at 1119.80. So it's the Russell 2000 index that we are looking at the moment. This has a price projection of 1082. That's your 1-to-1, but there's no way. It's more like 1065 to 1043, and this thing is not anywhere near an oversold condition out here. And that is inside of the Russell 2000. Those are the numbers to be looking at there. I think we took a look at the S&P 500. The Dow is pretty simple. It's the bottom of the consolidation box that it would be traveling. Here's the consolidation box inside of the Dow. You can see now you're clearly inside this level. If you take a look at the Dow off of the low out here on October the 10th, all the way up to the high that was put in on December 31st, you'll see that the 0.618 retracement is 15,433.32. We certainly are in the oversold territory, but normally the Dow, especially on these moves up here that we have been in, the Dow has been able to bounce. So the bounce that we're seeing here in the market right now, that was just simply set up by what I was taking a look at on the intraday charts, which is why I said, okay, we're going to see some kind of bounce to a move higher out here in the market. And that was just simply by taking a look at where that chart go, by taking a look at the ES Mini, by pushing down into this extreme, and it's kind of like, markets can only push up or down, and it's like a rubber band stretching, and it can only stretch so far. You really can't even break this kind of rubber band. It can only stretch so far, and it gets to a point where it just simply has to bounce to work off that condition. And I suspect that's all that we have going on right now. Maybe the ES Mini trades up to 1773.50, and if that's the case, that's a gift. That is probably a gift for you to actually be able to go short at least the ES Mini, or maybe the S&P 500, or the SPYs, or something like that. So what we're seeing here right now is to be expected in my opinion, in the marketplace. Let's go take a look at gold and silver. Let's look at the commodity sector. Let's see what we have going on out here, and then we'll take a look at some stocks here moving. You got Google, Amazon, BlackRock. A number of shares to the downside. We'll go take a look at those, see what's going on inside the core stocks. For the moment, though, let's go over and take a look at gold, silver, bonds, natural gas. Let's see what they're doing. So you've got gold here that's trying to break through its trend line, its descending trend line. It's off of its little session high out here, which was at 1264.70. It's trading at 1259. Breaking the trend line, says needs to close probably above the 1250 area. Let's just take a look at the 200-day or the 50-day exponential moving average. That's the black line going across my chart out here. Looks like that's kind of intersecting. So about 1250. 1249.70 happens to be the 50-day exponential moving average. So that's the number that you would be looking for. If gold dips itself right back below that trend line, that would not be a good thing necessarily. Silver, as you know, we took a look at the consolidation level, so it is broken off that consolidation. What's that black line going across my screen out here? Oh, that happens to be the old swing point here from June 28th, the high of which is 1963. At this stage, that has acted as a resistance point. That is inside of silver. But it has held the bottom of that consolidation level and at $19 and just a little bit of change. Actually, $18.97, which was the low from January 30th out here. So that looks like right around the bottom of the consolidation level. Light sweet crude, we haven't taken a look at crude oil. It is now moving lower. It's back inside its B point. Not to be unexpected. It was trying to take out a B point of a potential A to B equals CD up, and it was doing it on much lighter volume on the trading session of January 30th, about 25% lighter volume. It had on the 30th of January 200,000 contracts versus 252 from January 23rd out there. So that was not a confirmed A to B equals CD to the upside. Bonds here. Let's go see bonds here now moving up towards that horizontal resistance level. Now, this would be a trip and a half, wouldn't it? What do I mean by that? Well, if we just take this chart here and you kind of reverse it, meaning with regard to the Dow chart that we were looking at where prices move back into a consolidation level. So here's your long-term consolidation for the 30-year Treasury. And you can see if you go back to August in 2011, the bottom is really where we began to form the bottom of the consolidation pattern. That was really confirmed as moves down into October of 2011 held and moves down in that 135 area back in March of 2012 held. You can see that area was tested and, price broke through it. It was tested. And now you've got price moving right up in towards that area, which is right around the 135.05-ish type range. You're at 134.08. No bearish reversal signal out here. I suspect that that's where you're going to find the significant resistance in the market. But if it is able to close above that level, and I would have to say really close above the most recent swing point high near that area, which was October 24, 2013 at 135.24, shoot. That says that bonds will want to maybe move up to the top of its consolidation area. That's hard to believe and buy into. We'll just take a look at things one at a time right now. But right now, you got bonds trying to head up into that area of resistance, the old horizontal consolidation level. Right now, Dow's off 120, S&P is down 14. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Make sure you got your stops in place for sure. This is a market that is going to have some real damage being done to it. No damage, not too much damage so far here in Buffalo Wild Wings, BWLD. It's the ticker symbol. We've got that up on my screen here. I had a request to take a look at it. Now, we'll look at it on a couple of different time frames. This is the monthly chart out here for Buffalo Wild Wings. It's been in a nice bullish mode ever since, looks like about March of 2009 out there. And it's been in a buy signal really ever since. Again, it's a monthly chart that we are taking a look at. You can see on the monthly chart, it's in the extreme overbought condition here. So it's just been working itself off on a monthly chart out here. So from a longer term standpoint, the look is not too shabby. Let's take a look here at a weekly chart. Come on up on my screen here. I got the systems kind of bogging down a bit here on the weekly chart. The same thing as well. It's got a bit of resistance out here. at the level, the little bearish engulfing candle that followed this little doji that took place back on November 22nd. Again, it's a weekly chart for Buffalo Wild Wings that we are looking at on our screen out here. It's pulled back. The next buy or entry into this from a long-term standpoint would be a close above the high of the candle from January 24th. That's at 143.47. If that continues to act as resistance, then you're starting to see a change in trend on a weekly chart inside of Buffalo Wild Wings. So that's an important area to be monitoring. Again, that is the trading session of January 24th, 2014. A close on a weekly basis above 143.47 is bullish. Testing that area and rejecting it, as we have already done thus far this week, is bearish, and on a weekly chart, a change in trend out there. If we take a look at the daily chart for Buffalo Wild Wings, Buffalo Wild Wings has moved into a little bit of a correction mode. We saw the Rhodes momentum indicators that we're taking a look at on our screen out here, and you can see that we got into the cautionary zone right back here, most recently back in January 11, 2014. That immediately led to a sell signal, not a sell, as Basil likes to say, a sell mode out there. That was, so the sell signal the sell mode, well, really came in here on January 22nd, but I would say you really got your true sell mode out here on January 14th. This is the shorter term, this is the daily chart for Buffalo Wild Wing. Now, it should find support out here. If we take a look at this chart, it's trading into it has traded into a breakout area, and it's done it on pretty nice light volume out here. And this had a breakaway gap. This was on October 30th, 1.6 million shares. The prior session, which is a nice benchmark, 1 million shares. And as it pulled back in there, this is on January 29th, it did it with 499,000 shares out here. So I have not seen the indications here yet if you're looking to short this, and that might be what the question was, because I guess earnings is due out here. I'm not seeing a ton of chinks in the armor. That doesn't mean that it doesn't gap down and, that they have a, that it's a bummer or what have you. But right now, it's looking more like a buy than it is a sell out there in the marketplace. That was on Buffalo Wild Wings. So, folks, we got 30 seconds to go. It is Marvelous Monday. That means we got Basil Chapman. He'll be up next in the On-Deck Circle. Larry Pesavento, then Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Be very careful out there. We are seeing what looks like the A to B equals CD to the downside being confirmed with volume. And it looks like it's a beginning of a market to the downside that doesn't want to let many people in. And it may just be that you've got to just jump on board. Dow's off 150 right now. S&P is down 17. Have a great Monday. I look forward to seeing you first thing tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.